Welcome to our in-depth look at the financial value of life. Today, we'll unravel complex concepts, analyses, and data to help you understand how life is valued from an economic standpoint. We'll also answer some common questions and provide real-world examples. The value of life is a term with multiple interpretations. In economics and finance, it often reflects the monetary estimate of the benefit of reducing the risk of death. One common way to calculate this is via value of a statistical life, VSL. For instance, governments and organizations use VSL to evaluate policy costs and benefits. Consider that a regulatory agency evaluates policies to reduce pollution. If they determine that a policy will save approximately 100 lives but costs $800 million to implement, they'd use VSL to determine if the cost justifies the saved lives. One method to estimate VSL is by looking at how much extra people need to be paid to take on additional risk. If factory workers require a $500 premium per year for a job that has a 1 in 10,000 annual mortality risk, economists might estimate the VSL as $5 million. It's essential to understand that VSL varies across different contexts and regions. For example, the U.S. Environmental Protection Agency, EPA, often uses a VSL around $10 million, while in developing countries, this value may significantly differ due to economic and contextual differences. Let's examine a hypothetical scenario to see VSL in action. Imagine a city considering building a new highway designed to reduce accidents. The project costs $500 million and is expected to save 50 lives over its lifespan. Should the city proceed? Calculate the expected benefit using the current VSL of $10 million. The total benefit would be 50 lives * $10 million each, equating to $500 million. So, the cost, $500 million, precisely matches the benefit, making it a borderline case. Still, indirect benefits such as reduced healthcare costs must also be assessed. Question: do all countries use the same VSL? The answer is no. Various factors, including economic conditions, cultural values, and the specific risk being addressed, affect VSL. For another perspective, let's consider life insurance. While different from VSL, life insurance aims to quantify the financial value of an individual's life to provide for dependents. Policies are based on various factors including age, income, and health status, providing another angle on life's quantified value. An interesting study by the National Bureau of Economic Research investigated this by examining wage-risk trade-offs in job markets. They found that VSL estimates range significantly based on methodology and population demographic analyzed. Another factor affecting VSL is age. Typically, VSL decreases with age as the remaining life expectancy reduces. This presents ethical debates about the equal value of all lives regardless of age. In summary, while putting a monetary value on life is complex and controversial, it remains crucial for policymaking, insurance purposes, and economic analysis. It helps allocate resources effectively, ensuring the greatest good for the greatest number. We hope this video has clarified the often perplexing concept of the financial value of life. If you have more questions or need personalized advice, feel free to reach out. Don't forget to like, comment, and subscribe for more in-depth financial tutorials.